The truth about the Great Depression's global impact. Have you ever wondered what caused the sudden economic collapse that led to the Great Depression? This period of financial turmoil left a lasting impact on economies and societies worldwide. Our video dives deep into the causes, events, and aftermath of this significant historical event. The Great Depression wasn't just a dip in the economic cycle. It was a catastrophic collapse that left millions jobless and homeless. To grasp the severity, consider this. The U.S. unemployment rate soared to 25% by 1933. This video unravels how such a disaster unfolded. In this video, we will explore the prelude to the Great Depression, dissect the causes like speculative investments and bank failures, and examine the immediate and long-term impacts. We'll also look at government responses and the global ripple effects. Stay tuned for a comprehensive journey through history. Before the Great Depression, the global economy was experiencing a period of relative prosperity known as the Roaring Twenties. Industries thrived, consumer spending surged, and stock prices soared. However, beneath this facade of economic success lay vulnerabilities that would soon be brutally exposed. One of the most infamous events leading to the Great Depression was the stock market crash of 1929. Leading up to this, stock prices had been inflated by rampant speculation. Investors poured money into the market with the hope of quick profits, creating an unsustainable bubble that was bound to burst. Leading up to the stock market crash of 1929, speculative investments reached unprecedented levels. Many individuals and businesses poured money into the stock market, driven by the belief that prices would continue to soar. This speculative bubble created an unstable financial environment, setting the stage for the impending disaster. Speculative investments were fueled by easy credit and margin buying. Investors borrowed heavily to purchase stocks, expecting quick profits. This rampant speculation inflated stock prices beyond their actual value, creating an unsustainable financial bubble. When reality struck, the bubble burst, causing catastrophic financial losses. Banking failures played a significant role in deepening the crisis. As panic spread, people rushed to withdraw their savings, leading to a series of bank runs. Banks, unable to meet withdrawal demands, collapsed. This loss of confidence further crippled the financial system and eroded public trust in banking institutions. The global trade decline exacerbated the economic downturn. Countries imposed tariffs and trade barriers in a misguided attempt to protect domestic industries. These protectionist policies backfired, reducing international trade and worsening the economic slump. Global interconnectedness meant that economic distress in one country quickly spread to others. Economic policies of the time often worsened the situation. Governments struggled to respond effectively to the crisis, sometimes implementing measures that inadvertently deepened the depression. Austerity measures, tight monetary policies, and a lack of coordinated international response contributed to the prolonged economic hardship experienced worldwide. The immediate aftermath of the stock market crash was a widespread panic that gripped the nation. Businesses shuttered, and investments evaporated overnight. The sudden loss of wealth led to a drastic decline in consumer spending, plunging the economy further into turmoil. People's faith in the financial system was severely shaken. Bank runs became a common sight as frantic depositors rushed to withdraw their savings. Long lines snaked around banks, with many people finding their accounts drained. Banks, overwhelmed and lacking sufficient reserves, collapsed, exacerbating the financial crisis. Trust in banking institutions eroded rapidly. Unemployment rates soared as businesses cut jobs to survive the economic downturn. Millions of Americans found themselves jobless, struggling to make ends meet. The lack of employment opportunities led to widespread poverty and despair, with families facing severe hardships and an uncertain future. Homelessness surged as people lost their homes due to foreclosures and inability to pay rent. Makeshift shantytowns known as Hoovervilles sprang up across the country. These settlements, named sarcastically after President Hoover, symbolized the desperation and hopelessness of the era as people sought shelter wherever they could. Amid the economic turmoil, the Dust Bowl compounded the suffering of American farmers. Severe droughts and poor farming practices turned vast stretches of farmland into barren dust fields. The environmental disaster devastated crops, leading to further economic decline and forcing many farming families to abandon their homes in search of better opportunities. The Dust Bowl was a catastrophic environmental disaster that compounded the struggles of the Great Depression. Severe droughts and poor agricultural practices led to massive dust storms. These storms devastated farmland across the Great Plains, turning once fertile soil into barren wastelands and forcing farmers to abandon their livelihoods. The environmental causes of the Dust Bowl were primarily related to extended periods of drought and wind erosion. Human activities, such as overplowing and the removal of native grasses, exacerbated the situation. These practices left the soil vulnerable to erosion, creating the perfect conditions for the devastating dust storms that ensued. The Dust Bowl had profound effects on farmers and the economy. Crops were destroyed, leading to widespread food shortages and financial ruin for many agricultural workers. The loss of productive land further deepened the economic depression, as farmers struggled to sustain themselves and contribute to the broader economy. As the Dust Bowl worsened, countless families were forced to migrate in search of better living conditions. Many headed west to states like California, hoping for employment and more fertile land. This mass migration strained resources in receiving areas and altered the demographic landscape of the United States. In response to the multifaceted crisis, Franklin D. Roosevelt's New Deal programs aimed to provide relief and stimulate recovery. These programs marked a significant shift in government intervention, focusing on providing immediate aid, creating jobs, and reforming economic policies to prevent future depressions. The New Deal represented a beacon of hope during a time of unprecedented hardship. The New Deal's relief programs aimed to provide immediate assistance to those suffering during the Great Depression. The Civilian Conservation Corps, CCC, was one such program, offering jobs to young men. They worked on projects like reforestation, soil erosion control, and park maintenance, helping both the environment and struggling families. Recovery programs under the New Deal sought to rejuvenate the economy. The Agricultural Adjustment Act, AAA, was a key initiative, aiming to boost agricultural prices by reducing surpluses. Farmers were paid to cut production, which helped stabilize prices and increase farm income, providing much-needed relief to the agricultural sector. Reform programs were designed to prevent future economic disasters. The Social Security Act was a landmark piece of legislation that established a system of pensions for the elderly, unemployment insurance, and aid for dependent children. This act laid the foundation for modern social welfare programs and offered long-term security to vulnerable populations. The Public Works Administration, PWA, spearheaded major infrastructure projects, creating jobs and modernizing America. It funded the construction of bridges, schools, hospitals, and highways. These projects not only provided employment, but also improved the nation's infrastructure, contributing to economic recovery and enhancing the quality of life for many Americans. The New Deal had a profound impact on American society, reshaping the relationship between the government and its citizens. It introduced the concept of a social safety net and expanded the federal government's role in the economy. These changes fostered a sense of security and hope, helping to restore public confidence during a time of unprecedented hardship. Historians provide valuable insights into the New Deal's effectiveness. Many argue it provided crucial relief and restored public confidence. Others feel it didn't fully end the Great Depression, but paved the way for future reforms. Their perspectives enrich our understanding of the era's complexities and the government's role in crises. The Great Depression's impact was not confined to the United States. Countries worldwide faced economic turmoil, leading to profound social and political changes. Some adopted protectionist policies, while others leaned towards socialism or fascism. These varied responses underscore the global interconnectedness and the diverse approaches to economic recovery. The Great Depression left lasting economic scars. It reshaped labor markets, prompted regulatory reforms, and altered consumer behaviors. The crisis highlighted vulnerabilities within financial systems, leading to more stringent oversight and safeguards. Understanding these long-term effects helps us appreciate the importance of robust economic policies and regulatory frameworks. Policy changes following the Great Depression were significant. Governments embraced Keynesian economics, prioritizing public spending to spur growth. Social safety nets like unemployment insurance and Social Security were established. These shifts in economic policies aimed to prevent future depressions and ensure a more stable and equitable economic environment. Graphs vividly illustrate the economic turmoil of the Great Depression. Unemployment rates skyrocketed, GDP plummeted, and stock prices crashed. These visual aids provide a clear, quantifiable picture of the era's hardships. They help viewers grasp the magnitude of the crisis and the subsequent efforts to rebuild the economy. Graphs are invaluable for illustrating the economic data of the Great Depression. By visually depicting trends like unemployment rates and GDP decline, viewers can better grasp the severity of the crisis. These graphical representations help demystify complex data, making it accessible and engaging for a broad audience. Historical photos provide a poignant glimpse into the lives of those affected by the Great Depression. Images of breadlines, dust storms, and desolate streets evoke powerful emotions, bridging the gap between past and present. They offer a raw, unfiltered look at the hardships endured by millions. Incorporating historical footage adds a dynamic element to the narrative, bringing the era to life. Clips of speeches, news broadcasts, and everyday scenes immerse viewers in the period. This footage enhances understanding, allowing audiences to experience the urgency and turmoil of the Great Depression firsthand. Personal stories from those who lived through the Great Depression offer a deeply human perspective. These narratives reveal resilience and hardship, making historical events relatable. By sharing these individual experiences, the video fosters a stronger emotional connection, highlighting the personal impact of the economic collapse. Discussing the lessons learned from the Great Depression emphasizes its enduring relevance. The crisis taught valuable lessons about economic policy, regulation, and social safety nets. Reflecting on these insights helps viewers understand how past mistakes shaped modern economic practices, underscoring the importance of historical awareness in shaping a better future. The Great Depression's relevance extends to today's economic challenges, highlighting the importance of understanding past mistakes. By examining the causes and consequences of the 1930s collapse, we can better grasp issues like financial instability, unemployment, and inadequate economic policies. Learning from history helps us navigate current and future economic crises effectively. Summarizing the main points, we've explored the Great Depression's origins, the devastating impact on society, and the transformative New Deal programs. This historical journey underscores the resilience of people and the crucial role of government intervention. By reflecting on these aspects, we gain a comprehensive understanding of this pivotal era. Reflecting on the historical significance of the Great Depression encourages us to appreciate the progress made and recognize the ongoing challenges. The lessons learned from this period remind us of the importance of economic stability and social safety nets. Understanding history fosters a deeper connection to our collective past and present. We invite you to share your thoughts in the comments and join the conversation. Your insights enrich our understanding and create a vibrant community of history enthusiasts. Don't forget to subscribe for more engaging content as we continue to explore pivotal moments in history and their lasting impact. Thank you for watching. Stay tuned for our next video, where we will delve into another significant historical event. We appreciate your support and look forward to sharing more fascinating stories with you. Until next time, keep exploring history and discovering the lessons it offers for our present and future.